Hi student, we understood in the earlier videos that security market can be divided into capital market and money market. So let's now understand what is money market and characteristics of money market. So to begin with, first let's start with the money market. First let's start with the money market. See, this is a market for short-term fund. This is a market for purely short-term fund. What is the meaning? For raising money for very short period of time, I can use a money market. So I want to invest my money very short period. Within the 1 year, I want to invest my money. I have to choose a money market. So I want to invest my money in the more than 1 year. I have to choose a capital market. That is a different of money market and a capital market. Okay. What is the money market? This is a market for purely short-term fund. Okay. So basically, it's deal in monetary asset whose period of maturity up to 1 year. Up to 1 year. So whenever I remember, I'm talking about money market. I'm talking about those instrument which will have expiry period of maturity date of less than 1 year. So it's called a money market. Okay. See, in the capital market, we are using the security like a SAS and debentures. In here, money market, we are using some instrument. The instruments are treasury bill, commercial bill, certificate of deposits and government security. Through that only we can invest our money. Okay. And definition. So RBI also given a definition about the money market. So a market for short-term financial asset that are close substitute for the money facilities, the exchange of money for new financial client in the primary market, as also for financial client already issued in the secondary market. This is a definition given by the RBI. RBI is the Central Bank of India. Okay. So money market has some objectives. The first one, it provides a equilibrium mechanism. What is the equilibrium mechanism? Equilibrium means the balance, equal. It's equal the short-term surplus and deficit. It equal the short-term surplus and deficit. And second point, it provides a focal point for central bank intervention. And the third one, it satisfied their requirement. It's the short-term money meet their requirement at the reasonable price. At the reasonable price, it will be meet their requirement. Okay, this is the three objectives of the money market. Okay, and next we'll go for the characteristics of money market. One by one, we are going to see. The first one, short-term fund. Okay, so already we discussed short-term fund. Money market is a short-term investor, short-term investment. So it is a market purely for short-term fund or financial asset called a near money. Okay, maturity period. So it's a maturity period up to 1 year. Okay, less than 1 year. That is a maturity period of a money market. Conversion of cash. Okay, so here we can conversion of the cash. What are the asset we can convert it? It's readily we can convert, and without loss and with the minimum transaction cost we can convert those asset. It is called a conversion of cash. Okay, so money market have one characteristics, that is a conversion of cash. Conversion of cash means, so those assets which can be converted into cash readily without loss and with the minimum transaction cost, that is a conversion of cash. And no formal place. Okay, in the capital market have a formal place, there is a stock exchange. Through the stock exchange only we can sell or buy our SAS or debentures. In here it's don't have any formal places. So through the phone call only all the transaction will happen. So oral communication, through a oral communication. So after the communication, the exchange their relevant document and the written communication. Okay, after the oral communication, they exchange their relevant documents and the written communication. So it's don't have no formal places. And submarket, it's not a single homogeneous market. Homogeneous means same kind of. Okay, so it's not a single homogeneous market. It comprises of a several sub market. Those are call money market, acceptance market, and bill market. Okay, so it has some sub market. What are the call money market, acceptance money market, bill market, and role of markets. So components of money market: central bank, commercial bank, non-banking financial companies, and discount houses and acceptance houses. These are the components. These are the role of the money market. And highly organized banking system. So the commercial bank play an important role in the money market. The commercial bank are the nerve center of the whole money market. Commercial bank will link between the central bank and the money market. Between the central bank and money market, so it's play a important role. That is a commercial bank. Okay, and existence of secondary market. Actually, in money market don't have any secondary market, but there should be needed. The needed is there for the secondary market, but money market don't have a secondary market. Okay, and demand and supply of fund. Demand and supply of fund. So there should be a large demand of and supply of short-term fund. It presupposes of the existence of large domestic and foreign trade. So even domestic and foreign trade also we need a demand and supply in the money market and wholesale market. So it's we can large number value of fund or financial asset we can trade in the money market. So it's a very large market. It's a wholesale market. Okay, and flexibility and capital market also it have flexibility. We can sell our SAS or debenture immediately, can convert the cash. So in here also it have a greater flexibility. So there are, here we can introduce the new instrument also. It's a great flexibility of the money market. Okay, and presence of a central bank. Central bank is the RBI. RBI always presence in the money market and provide a financial accommodation in difficulty by discounting their eligible security. Okay, so RBI also discount the bill and give the money to the business. Okay, so that is the presence of a central bank. And now we are going to discuss about the money market is capital market. Money market is capital market. Okay, so duration of fund. Okay, so money market less than 1 year. Capital market is exceeding there more than 1 year. Okay, exceeding long term fund. It is a short term fund. That is a duration of fund. Supply of fund. So it supply the fund for the current business operation. It supply the fund for current operation. Okay, and it supply the fund for the long term. It supply the fund for the long term requirement. It's a set capital requirement. Okay, for the long term requirement. So money market provide a fund for the current business operation. Capital market provide the fund for the long term requirement and deal with the instrument. So what are the instrument they are deal in the capital market and money market? In the capital market, they are dealing the SAS and debentures. They are in the SAS and debentures. So in the money market, instead of the security, we are using the some instrument. That is a bill of exchange, treasury bill, commercial papers, and etc. Okay, and next. Money value. So money value of the capital market. So here the treasury bill, the minimum value is 1 lakh. Minimum value is 1 lakh. Okay, and a commercial papers minimum value is 25 lakhs. Commercial paper minimum value is 20 lakhs. So here SAS value, minimum SAS value 10 rupees and debenture value is 100 rupees. That is money value. Okay, so in the money market, money value is in the treasury bill minimum 1 lakh and commercial paper minimum value is 25 lakhs. Okay, in the capital market the SAR value minimum rupees 10 rupees and debenture value is 100. And role of major institution. So what are the institution play many major role in the money market? So here central bank and commercial banks. So they play the major role in the money market. In the capital market, development bank and insurance company play a major role in the capital market. And availability of instrument. What are the instrument? It's available. So money market instrument generally do not have secondary market. Already told you know. So money market don't have secondary market, but it's needed. In capital market, it have a secondary market and subdivisions. So money market don't have any subdivision, but capital market have division. There is a primary market and also the secondary market. And a place of transaction. So money market don't have any formal places. So through phone call only, they are their transaction. They are doing their transaction. And the capital market have formal place. There is a stock exchange. There is a stock exchange. Okay. And a participant who and all participate in the money market. Okay. So here brokers also called a bankers or RBI and government. So here who and all brokers, investor, merchant, bankers, underwriters, and commercial banks. Those are the participant in the capital market. And number of instrument. So what are the instrument in the capital market? We are using the only SAS and the debentures. In the market, we are using the more instrument, that is a interbank call money, notice money up to 14 days, short term deposit up to 3 months, and 91 days treasury bill, and 182 days treasury bill, and commercial papers. Okay, so these are the instrument we are used in the money market. And the client, so financial clients, asset and security deal in the money market. We can claim the financial clients and also asset we can deal. And here we can claim the bonds and as bonds is a debentures. Okay. And next risk. So low credit and market risk. So here only low level credit. So market risk also low. And their high credit and market also risk. Okay. And liquidity, so high liquidity in the money market because this is only less than 1 year. There is a short time, so easily we can convert the money. There is a liquidity in the capital market, also low liquidity in the capital market. And price discovery, so we in the money market we cannot discover the price of the particular instrument. Okay, in the future what is the price we cannot discover, but in the capital market we can discover the prices of the SAS. Okay, and regulator, so we want to regulate the money market. Central bank is the regulator of the money market. This RBI is the regulator of the money market, and their RBI and also the SEBI also regulator of the capital market. So underwriting, what is the underwriting? Instead of the financial institution invested their money in the market. It's called underwriting. So money market don't have that facility. Capital market have that facility. So it is a primary function for underwriting. Dominant institution. So in the money market, commercial banks always dominate the institution. In capital market, non-banking financial companies and special financial institution dominate the capital market. Okay. And next, who and all participate in the money market? So government of different countries, central bank of different countries, private and public banks, mutual fund institutions, insurance companies, non-banking financial institutions, RBI and SBI, commercial bank, state government and publics, who and all participated in the money market. I hope you understood about the money market and the characteristics of money market and the difference between the money market and the capital market. Thank you, students. We'll meet on the next video.